Well, higher taxes, delayed retirement, less money in the pocket, these are just some of the things that European citizens are facing as part of the austerity measures. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Vincent Boland joining us now live from London. So, Vincent, we know that Greece, or rather Spain and Portugal, have gotten on board as Greece has with austerity measures. But how concerned are politicians about social unrest, social strife, as we saw in Athens?
Well, I think at the moment the risk of that is probably not that high. There was certainly a very strong reaction to the austerity measures in Greece, but that was because they were so extensive. Ireland has taken very large measures as well, and so far they have been accepted rather grudgingly. I think in Spain and Portugal you probably will see union opposition, public opposition to them, but not on the scale that you saw in Greece. So I think at the moment European populations are kind of bracing themselves really for austerity, knowing that there really is no other option.
How do you think investors are viewing what the Eurozone is doing? I mean, at least in the euro dollar, we have to say it's unfavorable. It seems as if more and more investors are seeing risk in the region.
Absolutely. I think this is going to have big implications for investors looking at Europe in the next few years. As you saw, it's already taken a terrible toll on the bond markets. There's been huge divergence in spreads between Greek bonds or Spanish bonds on the one hand and German bonds on the other. And it's possible that you'll see something like that in the equity markets. That must be a risk, because there will be slower growth in many parts of Europe and not slower growth in other parts. So the likes of Germany and France should continue to grow, while Spain, Portugal, Italy, Greece shrink. So I think there's going to be a divergence, and there's going to be a bigger concentration perhaps on country risk rather than just Eurozone risk itself.
Now, Vincent, we know that the UK and the US also have high debt. We know the UK tackling it now with its new leadership. But as for comparisons between the US and Europe, what are people saying?
Well, at the moment, I think that most of the focus is on Europe, and in the UK as well. There's a lot of focus on spending cuts, etc. I think one of the differences that you'll see perhaps between Europe and the US in the approach to reducing budget deficits is whether to go through tax rises or spending cuts. At the moment, what we're seeing in Europe is a combination of both, but I think probably if more is needed, you'll see a greater emphasis on tax rises, because Europeans are so attached to their social programs. That may be less the case in the US, where I think the emphasis will probably be on spending cuts, where budget deficits need to be addressed, especially including at the federal level.
Vincent, we thank you very much. Vincent Boland joining us there from the FT from London.